The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Welcome to the COB. Always wonderful to be here with you and you. I'm Nadine Blaney.
I'm Tessa Arcilia. Welcome. Another week, another red. I love this.
You do. I don't. Let's bring up the COB Australia Index, closing into negative territory, down by about 0.2%. But hey, not at the lows of the day. It was just a bit of a tricky one out there, Tessa. You know, you've got the banks coming under pressure, the healthcare stocks coming under pressure, and of course they make up a pretty big weighting on this local market.
Absolutely. And also we saw tech falling. But of course, as you mentioned earlier already, Nadine, all day politics has been quite the theme. And I think we're reacting to uncertainty in the US, in Europe, as we look to two elections this week.
We do. Yeah. Those are the key themes. We should also mention it is the start of a brand new financial year with all of the promise that holds for us finance nerds anyways. And I think it's also worthwhile mentioning that we've seen quite the fall in tech. So I was looking a little bit earlier on, the likes of Wisetech's Global, Zero, all significantly lower. Even Technology One is off by more than 2%. So just a bit of a painful one out there for many investors.
Yeah, so let's have, as we said, it's election week this week. So you think that's going to weigh on the market?
A lot of uncertainty. And that presidential election in the United States, I don't think did anything for, a lot of the morale, I suppose, of the Democrats at least. So that is an ongoing watching brief. And then the French elections, of course.
And of course the UK. I think that's interesting too, because you might see a change in government in that the Conservatives are not doing very well.
The polls are showing, a Labour victory. They're showing that the Conservatives, the vote's actually being split by the rise of the, I can't remember the name of the other party. But so it looks as if there's going to be a change of government.
The Lib Dems and the Labour seems to be the expected. Well, let's see, right? Thursday.
Okay, so more prescient for investors here locally. Let's take a look at these sectors and how they performed today. And there you go, tech off by big falls for Wisetech, Global and the like. CSL also proving to be a really big weight on the market overall.
Barely any highs there. Let's take a look at some of the telco stocks, also down. Telstra down by about 0.5% there. TPG, Aussie Broadband, Superloop, and Spark New Zealand.
Superloop, it reminds me of the last call on Friday. We had Anita Costa joining us from IFM Investors. You'll have to go back and watch the episode, but that did come up in conversation. It was a good one.
I heard that was a fun one.
Take a look at that. It was a great last call episode. And there you go. There's the financials in focus. ANZ, interesting to note that it is looking pretty positive. We've had Morgan Stanley come out today and say that it's optimistic about ANZ's acquisition of Suncorp. That on Friday, Jim Chalmers gave the tick of approval for ANZ to take over Suncorp's banking business. It's got an equal rate weighting on ANZ and a price target of $27.80 per share.
All right, well, let's welcome to the COB now, Josh Gilbert from eToro. Josh, thanks very much for joining us today. First day of the financial year. I suppose set the tone for us. What are you looking forward to, expecting?
Yeah, well, hi guys, good to be back. Look, I mean, we ended what was, a bit of a mixed start to the year really for the ASX in that first 6 months. The S&P 500, in a slightly different position. What a great start to the year, 14.5% gain in that first 6 months. That's huge. And I think that just goes to show that sort of the difference in maybe the paths that both markets are on. We've got the Fed that are potentially looking to sort of cut in September. Whereas locally, we're sort of still having to sort of battle against inflation, and we've still got question marks over whether we're sort of going to see a hike or not. So I think looking into that sort of next 6 months, of the year. Obviously, we've got, reporting season coming up. That's going to be obviously huge for the local market. And then I guess in the US, I think the focus really is over, this breadth, and are we going to sort of really start to see some of that capital move away from tech and into some of those maybe cheaper cyclical sectors, that we may start to begin to see that rotation as we near closer to sort of rate cuts. We've already started to see that in Europe, and I think we've still got a lot of capital left on the sideline, a lot of cash on the sidelines. And I think that, if we do begin to get these rate cuts coming through, especially from the US, we might start to see some of that capital flow back into markets in the US, into some of those cheaper, more cyclical areas, in the final 6 months of the year.
Yeah, interesting. It's sort of the story today, isn't it? When we think about the FOMC and the Fed, I think we should keep in mind that we're going to be hearing from Jerome Powell, the Fed chair, this week. What are you expecting?
Yeah, well, I think ultimately, whenever we're going to hear from Jerome Powell, it's always, a bit of a risk event. He always does have that ability to sort of move global markets, obviously here in Australia as well. We'll get a better understanding, I think, maybe, how close he might be to sort of maybe a cut coming through. We obviously had that PCE data on Friday that sort of came in line with expectations. But again, I think it showed us once again that we are sort of starting to see, inflation, slowly but surely coming down. I think it reaffirmed to us that there is progress on inflation in the US, and of course that is the sort of the preferred inflation gauge for Jerome Powell as well. So I think that was a good news there. We've obviously got jobs data coming through this week as well. We've got non-farms towards the end of the week as well. So I think bottom line here, I think we're really moving towards a rate cut. And I think if we don't get hotter than expected inflation coming through over the next sort of month or two, then I really do think that puts a lot of pressure on Jerome Powell to sort of cut. So I think, what we hear from him this week, his comments will have a clear impact on markets. Again, probably not going to have anything groundbreaking from him. He's not going to come out and tell us he's cutting in September. But I think any shift in language towards maybe being slightly more dovish will be something that we'll be watching.
All right, and taking it closer to home, what are you watching this week? Especially we have the retail sales number out Wednesday, right? And what are you expecting, and how do you think it'll weigh on the RBA?
Yeah, well, a couple of, I think, key points. We've got the RBA minutes tomorrow. Then we've obviously got retail sales. So I think two big events, especially after that inflation data that we had last week. And I think if we look back to probably where we were maybe a month ago, yes, we had that conversation about potentially looking at, another hike, but it probably wasn't on the table as much as it was, within the last sort of week or two. So I think those minutes are going to be sort of really interesting, especially after we did have, rates stay on hold. So that will be a really important factor to sort of see how close the RBA were and that conversation they had around potentially raising rates again, even before that inflation sort of number came through. So that's going to be really important. And then retail sales data will be really interesting as well. That's every data point, I think, between now and August is going to be really important for the RBA. I think we're expected to see a 0.3% increase in retail sales data. And I think what that might tell us is if we do get, stronger than expected sales there, I think that gives the RBA a bit more weight to be able to sort of hike, really, because it still shows that there is, consumption is still clearly very high. We're still obviously seeing consumers out spending. They may feel they have a little bit of leeway there to raise rates further, especially if inflation remains high. Whereas if we get a slightly weaker, number, again, that does maybe put question marks on another hike from the RBA, especially with, homeowners clearly under a fair bit of pressure at the moment as well. So like I say, every data point between now and August is going to be really key. Obviously, that most important number is going to be that Q2 CPI number. But, I think retail sales, unemployment, business confidence, all of that is going to be really, really important for investors. And I think does have the ability to cause, a little bit of volatility in markets, because we will see market pricing adjust accordingly to the data as and when it comes through.
Yeah, we heard from a few retailers last week as well. Baby Bunting updated the market. We've had a lot of conversation around the retailers, because even though we've seen a lot of pressure coming through on consumers, we're told, and mortgage cliff, et cetera, spending has remained strong, to your earlier point. JB Hi-Fi, a lot of those companies are still up around record heights. So the retail sales one will be interesting, particularly ahead of reporting season. I know it's a bit early in the piece, but you're starting to form thoughts about what to expect, Josh, are you?
Yeah, I guess that if we sort of focus really there on retailers, I think the what we've seen so far over the last sort of 6 months, and especially in the numbers that we had in the half yearly results, were that it was better than expected. Yes, we had weakness across, some of those names, JB Hi-Fi, Harvey Norman, a lot of those retailers, but they were holding up, as you said, much better than many had anticipated. We still had spending that was still pretty strong. And I guess what we're really going to be looking at on those full year results is, has that continued? Yes, we know that the results are probably going to be, not up to scratch that many have expected, but have they continued to be resilient? Are we continuing to see sales? But I think really the focus is going to be on that outlook. We had Harvey Norman was one of the worst performers on the ASX last week, and I think we're maybe going to start to see, the idea of higher for longer rates and the potential for another hike coming in. Is that really then going to be the kick in the teeth for those retailers that have remained resilient, over the period? I think at the start of this year, when we had those set of results in February, we were maybe slightly more positive because we were thinking, okay, we might get a rate cut towards the end of the year, or at least at the start of next year. That has been pushed back significantly. So I think the idea around retailers does change as we go into reporting season, and that outlook is going to be really key. And I would certainly expect to see some of those come through slightly weaker than expected, and that might put some of those on the back foot. I think, in terms of broadly retail, reporting season in general, for us, we'd probably be looking at those material names to see how they're sort of holding up. Had a little bit of positivity over the last sort of 2 to 3 months from China. So again, I think more broadly, it's certainly going to be an interesting reporting season, given that we've got rates higher for longer for now.
All right. Thanks so much for joining us today. Josh Gilbert from eToro there. Thanks.
Good to see you, Josh.
And you. Take care, guys. Thank you.
All right, let's get across some of the big corporate stories before we get to the leaders and laggards on market today. And we've got Lendlease, obviously one of those big companies today that we heard from. It has sold one of its assets in the United States. So this is part of its shrinking to greatness strategy.
It's
bring
US
things
military
back
business, isn't
to,
it? Yeah.
I think it was defense housing business.
Yeah.
And we also have a bit of a change at the top happening when it comes to, Cobram Estates, although that's not big news. Brambles, a bit of a change.
We also have Brambles, yeah, and also Coronado Resources said to see movement today as well because of Anglo-Americans having, what was that, a gas ignition incident, so that affected
Yeah,
the
there's a
price.
fire at one of its mines that it's had to suspend operations there, and that's actually put a lot of those coal miners as the best performers today. But the stock of the day was Lendlease. Let's take a listen to what our experts had to say.
Obviously inflation last month came out very strong, 4.0 expected, and it's kind of a tricky position on where RBA will go, whether they'll actually hike rates to stop what seems to be increasing inflation. And I think obviously this plays fairly bad towards Lendlease in the construction sector, and I can relate to where the construction costs have been going up higher. I do talk to some of the construction guys as well, and exactly right, their margins are being compressed.
So the cycle is against them. We actually jumped in at the end of last year. It got smashed down to $6. At that point, the recent strategic changes and all weren't there. And it had a good bounce back. It bounced from about $6, low sixes to low sevens. We had a good run, and we were going into that February result. We got out before the result.
Oh, right.
Because there's too many moving parts, and we've had a good run.
Oh, there you go. Lendlease there with our guests from the call with their point of view. But we did see the stock going up today, I think. Market liked that one.
Yeah, it was up by 4.25% by the end of this session. Let's take a look at some of these market leaders. And to your earlier point, Tessa, look, there is a theme. Coronado, Whitehaven, Stanmore, and New Hope. So could be a prolonged shutdown. Anglo-American, as you know, is one of the world's largest coal producer. So the thinking is that these guys could step in and step up. And anytime you see these sort of unexpected events, you can actually see it impact the price of coal as well. So that's one to watch.
Okay, and Lend-Lease makes it there at the top as well. All right, looking at the other end of the market, laggards, Strike Energy down 15.5%, Polynovo, Pro Medicus there, Nanosonics and Wisetech.
Yeah, so Strike Energy had a broker move against it. And it's interesting because there was a lot of enthusiasm about this company. I spoke with the CEO, I think it was the week before last. If you'd like to take a listen, there's a lot of enthusiasm around the West Erregulla. I have a terrible time saying it. But go back and listen to that interview. But I think just a little bit of I guess, enthusiasm being contained or a little bit of cold water being thrown on that. In the small end of the market, Tessa, we
have a look at
no, that's not quite right.
In the small end of the market.
There we go.
Oh, there we go. Envision Medical. Oh, this is the laggards in the small end of the market, down 12, almost 13%. KNS, Empire Energy, SmartPay. Don't think there's any news there, and Plenty. SmartPay and Plenty down 9.5% roundabout. Okay, so let's look at what is happening overnight. Oh, happy Canada Day. Someone reminded us today in the newsroom. So that's bank holiday in Canada.
Yes, it is.
We'll have manufacturing PMI and prices in the US. And we will hear from the German president, President Nagel, tonight.
All right, so to hear tomorrow, we just were speaking with Josh Gilbert from eToro about the fact that we've got the RBA minutes being released. So we're looking forward to that one. We've also got building permits in New Zealand. Looking further afield, we'll hear from ECB President Christine Lagarde. Of course, we'll be looking for any comments as to the political uncertainty, the role of France in the European whole question and what that may or may not mean for rates going forward. Of course, the ECB has been quite vocal in their commitment to continue cutting rates in 2024.
Yeah, and just a quick look in Japan there. Again, Yen Watch is still in the news. So 10-year bond auction tomorrow as well. All right, that wraps it up for the Monday. Join us for this week. It's going to be a big week, I think, with lots of analysis, a lot of moving parts. And also the July 4th holiday, as you said.
Yeah, so we're watching the Euro ahead of this, whatever comes from France. We'll get you across that in the morning, keeping an eye trained as we have that Euro strength coming through. We'll see you tomorrow morning. We're live from 9:45.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
This July 18th, join us for our next virtual investor event. It's a deep dive into the practicalities of succession. Our experts will show you how to develop and execute a family wealth transition strategy. Find out more at ausbiz.co/succession.
Gil.
Oh, hey, Ken.
Here we go.
You're still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
Be better!
I'm still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.